host Niraj Shah, and our guest today is a veteran of a very niche industry in the Indian landscape. Uh, he's the founder promoter of Sheela Foam. They started the company, I'm told, way back in 1971. As of June 18, they completed 50 years, and we will learn from Mr. Rahul Gautam about a few things that they've learned in their journey, but we'll save that best piece for the last. First, Mr. Gautam, thank you so much for joining in, and I hope all is safe.
Thank you, Niraj. Thank you very much. Yes, we're safe, confined, not moving out, but safe.
Yeah, which helps. Probably not moving out and being safe just run so much in conjunction with each other. But yeah, like I said, before we talk about the slightly long-term learnings from the history, can I focus on the near and the medium term?
Sure.
And we thought of doing this interaction with you after your Q4 numbers came out. And I thought a report, a note, or rather the headline from one of the research notes which tracks your company and spoke about it post Q4 was very, very interesting. They say, and I quote, that the template is intact. Revenues are up, margins are down, and that is good. Could you summarize this for us? And what do you make of this quarter?
So I think the challenge in that part was for the top line. And of course, as far as the bottom line is concerned, it would eventually come back. So I think we had to do everything to ensure the top line. And if we were able to come close to what we needed to do, I think that's what was meant by that the template is intact, you know. And the bottom line, of course, is a factor of many other things that will be there. The challenge was the market, really.
Okay, can you talk a bit about that? I mean, is it the fact that that one, of course, demand got impacted severely in the second wave, and how do you see that, of course, shaping up as we are looking to unlock trade a bit? Also, because you are in many ways now dependent, very reasonably, alternatively, if you will, on the online channel too. So one, how is that? And two, how are what were the supply side challenges, and how are they right now?
So the second wave, of course, has started from this financial year, virtually from this financial year. It has taken its toll, and I must confess that for about 1.5, 2 months, we were not focusing at all on the top line or the bottom line. We were totally focused on our people, their well-being, the availability. I mean, what we were doing was arranging for ICU beds and oxygen and medicines, etc. And subsequently, we have been working on getting everybody vaccinated. So that's what the focus has been. But as the second wave kind of abated, though, again, I think everybody that I know of lost some near and dear ones, and it was an extremely painful time. But as it as abated, so markets are coming back, are responding. Every day that I see the order book is getting better, and therefore I am pretty confident that at least for the next month and a half or two, it should be a good reflection of a pent-up demand that would come in. Now I know there is a lot of talk about the third wave and when will it hit, etc. So we all hope and pray that it doesn't come, or if it comes mildly. But the infrastructure and the hospitals and all that are far better prepared for it. The human beings have gone berserk, at least I can say that about Delhi, that we see, and which will be detrimental to or will support the variants and all that. But we're hopeful it will not be that bad. And all the noise that we create and the government creates or the doctors create or the influencers create, I think is the more it is, the better it is. It's just to keep that little fear instilled. But it will come. My thoughts on it are that it will come maybe somewhere around October, a mild one, and then it will keep. Both the amplitude and frequency will keep dying down, and then it should finish off. But the impact on the business should get better from now on.
Inshallah, as they say.
Mhm.
Uh, let's talk a bit about the core business too. Now, one is demand, and I'm just wondering if you indeed believe the deck. I mean, did you witness a factor of pent up demand post wave one? And do you believe that there could be a pent up demand, or are you not quite factoring that in? Because I speak to industry leaders and across sectors, some believe that there will not be a second pent up demand in this post second wave for their products, while some believe there might be. What is your thought?
Going back to the first wave, there was a pent-up demand. And one of the prime reasons for that was that people just thought that this has happened. Now it's not going to come back. And that's the end of Corona. And therefore, just people came back to the market, industries came back, etc. I think the second wave has changed that sentiment a bit. You have lost some close people, and you are seeing that it was not first was not the end. I mean, the second one has come, so there is a little more fear to it. However, uh, like the first one, where there was a clean lockdown right across the country, the second one has not been like that. So we never came down to a zero level. We always came down to some small levels, mid levels, sectorally, geographically, kind of closing up, etc. So how does it reflect on, let's say, the first quarter? So first quarter last year, 2.5 months, completely gone. This year, not gone. There has been 30%, 40% sales, which have kind of held back. And therefore, when we will sum it up, um, it will be a better position. There would be the pent-up demand will be there because the potential is there, and people who have been locked down will come out and will spend. There is no denying that fact.
Okay. Okay. There's also an international geography that I'll talk about, but just first, actually, can we talk about that first, and then I would love to understand from you the nature of the products that you're thinking about. But on the international side, I think even this quarter, some of your geographies did reasonably okay. How is that shaped up in Q1? Because I think the world was in a slightly better shape than what India was in.
So two separate geographies. One is the Australia, New Zealand geography. The other one is Spain and Europe, which is the part of the European market. Both have, for us, have completely different dynamics. Australia, pretty matured market. It did have a lot, or continues to have a lot of pent-up demand, primarily on accounts of that people have money in their pocket. One is the government gave some money. The second one, Australians spent a lot of money on traveling. And because traveling has been virtually zero, that money has been in the pocket. Added to that, that you've been spending time at home and therefore get to experience the stuff, and you say, let me go and get a new one. So that's the classical phenomena which has been happening in Australia, and it has the markets have gone up. It's holding, and I presume that this year too, the increase may be smaller, but it will be there. When we go to Spain and European market is the largest market of the world. It's one combined market. Spain, where we are, we have a very small share in that market, something close to 1%. And therefore, the headroom to grow is huge. And so even if that market shrinks a little bit, our headroom still kind of remains intact. And now it is only for us to expand capacity, to ensure that we are able to supply, etc. One thing more that has opened up for Spain is the option of supplying to the United States. USA, big importer of compressed mattresses. China was the biggest supplier there. Bad sentiments over the last few months, and Americans looking for alternate sources. Spain happens to fit that very well because it's just across the Atlantic, and it is still, in spite of being Europe, it still is a low-cost economy. So therefore, you are able to serve that from there. So Spain, I see a lot of, as far as this year is concerned, a lot of growth coming out of that place.
I'm just wondering, if not just this year, Mr. Gautam, but would you reckon that with you having a small share in Spain and therefore virtually a very small share, if there is a market share phenomenon in the rest of Europe, and then if the Americas open up for you through that Spain thing, would you, or the Spain geography, would you believe that there is a potential for high multi-year growth also because of the fact that your base is so low?
Niraj, you are absolutely right on that thought. Yes, that potential is there. It will be up to us to see how much we can capture that, or how much can we actually make that happen. So for sure, because of being very small in the market share and the US opening up, the potential is very high.
Okay.
Okay.
Now, before I get to the raw material piece, because that's the big, how do I say, spanner in the wheels, so to say, just one more question. As I looked at some of your growth over the last few quarters, and please correct me if I'm wrong, but I've seen that you've expanded the product range to take advantage of the lower end products as well compared to what you probably used to do. And please correct me if I'm wrong, as I said, but one phenomenon that I somehow seem to sense in the last 6 months is that the money with the haves is much higher than the money, this discretionary spend with the have-nots. And therefore, my question is, would you expect that while you've expanded that bucket, which is the lower premium bucket, would you expect growth to be higher in the higher premium bucket simply because the power to spend discretionary is much higher currently post-COVID in that bucket?
So Neeraj, the so-called haves that you talk about, number one, they're very few in number. And therefore, that even if there is a doubling of the materials being sold in that segment, it still will be, let's say, impacting the entire kitty. It will still be a low number. The bigger part of it is going to come from the lower end. One, as you said, that the lower end or the lower economic strata has lesser money to spend. So will they not do it on this category, or will they do it and get a lower value product, or lower? It's more is happening on the lower value part of it. The reason is that in India, people buy mattresses or furniture based on events which will not go away, for marriages or changing homes or adding some bedrooms to your house. Those kind of things will continue to happen. And the only thing is that the average selling price or the average purchase price for the consumer is kind of lowering. That's one. Second, where the basic change is happening is that 65-70% of India still sleeps on some kind of dharis or cotton mattresses or chatais. And they don't use any modern mattress. Only 30% do that. And of that 30%, a large chunk is still an unorganized sector. So the shift, the perennial shift from not having modern mattresses to getting to the organized or directly to the organized, and then the unorganized getting to the organized. This will keep happening. And when this is happening, the ASPs will go down because those are people whose affordabilities are far lower, right? And that's where the volume is going to be. That's where this product will be.
Have you kind of seen, Mr. Gautam, a decisive shift in therefore the growth rates, say in a block of the last 5 years versus what you experienced in the past as the organized to unorganized and more people recognizing the need for a good mattress? So is there a decisive shift in a block of the last 5 versus the previous any number of years?
So I would give it a word as decisive shift, but would definitely say it's a perceivable shift which is happening. You can feel it, but
the growth rate show that, is it?
Yeah, the growth rate shows that. And there are events like, let's say, implementation of GST, but then the law getting implemented and, becoming where it's more difficult to evade and avoid, etc., for that happening, and therefore the unorganized moving to the organized. All that takes a little bit of time for people to change their habits. I mean, these are products which were bought where people don't even want invoices for them. And now, when it is changing, where the payment is done through a card or is done through a bank transfer, obviously this cannot be evaded or avoided. We help that by giving warranties in case you are able to present your invoice at a later stage that, look, this is a product that I bought, etc. So I think the or let's say the awareness of all that put together, that change, perceivable, would have liked it to be much quicker. Decisive as the word I'll pick from your vocabulary would have been better, but it should happen. It will happen.
Okay. Now the slightly small problem here, though you did mention that it's transient, but I still want to dwell upon it a bit, and that's the contraction in margins. I mean, even though you contain the EBITDA margin fall by 320 or 350 basis points, the gross margin fall over 1,000 basis points was quite steep, right? And from the looks of it, these prices are not showing any signs of going down if we speak to the producers at least, and some of them are listed, so therefore we speak to them too. What's your sense, Mr. Gautam, of how long does this last? How painful could it be? And what if anything you can do about it?
So undoubtedly, the major impact is of the raw material prices, undoubtedly. It is also true that in the last couple of months, they have really shot through the roof. However, untrue that they are not going to fall or they are not falling already. So if I would take the last 3 months or three and a half months, let's say both the major raw materials, polyol and TDI, have gone to the level of 250 rupees a kilo. Today, polyol is down to about 180 and TDI is down to about 150. So already that fall has taken place. The 250 numbers were absolutely not tenable, completely opportunistic on their part to be working, just because there is a bit of a shortage or the global situation has come about and where material from outside is taking its time to come, etc., to take advantage of that position and to create that. And of course, there are stories galore that their inputs or their raw materials would have gone through problems. But I would even go on record to say that some of these suppliers have not behaved responsibly on this part.
Profiteer, you mean?
Profiteering is okay. I mean, if you have it on a sustained basis, but to let the down market or the downside or the front end of the market experience such huge fluctuations or movement, it's not possible for the markets to behave like you can do that. You're a commodity or almost a commodity, but they need to be translated. What does it do in the end? When raw material prices go up, people will start using inferior products. People will shift over to alternate materials. People will use lesser thicknesses or lesser qualities. And once you are used to working at those low levels, or you get you're okay with a little lower thickness, you don't need a mattress which is 4 inches, but you're okay to do it with 3 inches, you will just remain there. It is like hitting yourself for the future. We have tried our best as individual company, as a part of an association, to make this feel across to the suppliers, to say that, listen, you have a longer role to play. You're going to stay here, and therefore everything that you must do is to grow the markets, and that's your only job. But I guess there is intense competition at that end. There is they have their own quarter-on-quarter results to look at, and therefore behave like this. But this chaos, we should, whatever is in our hands to kind of bring that down or dampen that down, is what we try to do. So when we are at the peak of that cycle for the raw material, margins do contract, margins do become less, but they will come back. If you would look at a little bit of a longer period of about 6 months or so, there's quarter on quarter may not be a worry any longer.
Got it. Okay, we are hopeful for that. Last couple of questions, Mr. Gautam. We've spoken for long, but still have a couple of questions. One is when I look at analysts to cover your business, they cite two risks. One is, of course, raw materials, which you've spoken about. The other one is competition, both from global players who would see India as a big market, and from the e-commerce avenues where you are in fact becoming a part of as well, but they see that as a bit of a downside risk to what they believe would be about a 30% CAGR growth rate for the next couple of years on the bottom line. How would you respond to
that? Raw material part, as you said, I've already spoken about it. When you look at, you have a 30,000 feet view, there is enough capacity globally, there is enough capacity coming up. Then it's only a question of logistics and supply chains that need to be there, and the availability of the material all over the place. There should not be any reasons for a supply-demand gap, except geographically or some countries, sometime it may happen, and that's where the spikes and all that kind of come in. We have to learn to live with that. The competition part, global competition. So, number one, India, the mattress market is a little unique in the sense that there are no custom-made sizes. Sorry, there are no standard sizes. Virtually no standard. 50% of the product in the country are custom-made products, and therefore, for anybody to import them from outside is a problem. You would have a long supply chain for doing that. The availability of the material locally is there, and therefore there is no need for anybody to import from outside. We just talked a few minutes back about that the top part of the society, which would be impacted by the brand, or which would be impacted by imports or foreign brands kind of coming in. And that is a very small number, and so that will remain. Would a few Sealy or Hasten mattresses be coming in? Yes, they do, but that's not a big deal that we're talking about. Local competition, yes, it is there. We do. Actually, and anybody entering or anybody wanting to grow their size beyond the normal, rates of growth, people tend to compete in the same geography and not really create not really go out of, let's say, the city or go to the next tier cities and work out. And this is the unfortunate part. However, again, if you look at a broader view, I would still say that all of us are not competitors, but more like co-suppliers to the market. We are, because of the size that is existing. So we should continue to, of course, still on the front end, there would be all these sales and schemes, and this one is given that, and that one's given that. But by and large, the size which can be, or the potential is large enough for many years to kind of come. The the third thing that you talked about was the e-commerce part of it. So unfortunately, it has happened like this, that the e-commerce and the offline or the brick and mortar markets have kind of sort of concentrated in different hands. But at the end of the day, e-commerce is just another process of reaching the consumer. I understand that there are standard practices and systems for the offline or the bricks and mortar business, and the way that the way that the e-commerce sells is on a completely different characteristics. I mean, they have to keep creating excitement. They have to keep coming up with Black Friday. They have to keep coming back. This is the sale and 40% off and 60% off. While the brick and mortar business or the regular stores, they work more on stability. They work more on talking with the consumer, trying to figure out what is the best thing he or she would buy, etc. And they cannot afford to go through this kind of thing, 40% off and 30% off, and then for the rest of the year, nothing else happening, etc. Okay. So it's the characteristics which are different. And therefore, we have chosen to do it with two different brands so that we don't trouble each of the existing areas. You are right that the e-commerce is, again, from a very small base, and therefore the ability to grow and the corona has only helped that. People have got used to more and more buying more and more things at home and not really making a trip, etc. But India is a very diverse country. There are still smaller towns where people, even in the worst of the corona times, would take a walk to the store, would still chat there, would spend some time, will do all that. Cities will behave in a different manner, so the e-commerce will have more impact. But we're there. We're growing. It's an important part of our business. We will grow that.
Okay, final two questions, and we'll make it quick. One, Mr. Gautam. So if analysts view it on a YOY or max 2-year outlook basis, right? They obviously by virtue of the work that they do, they don't look beyond that. Do you and therefore my question to you is, would you believe that a 15-20% CAGR growth rate that people are penciling in for the space, organized space versus unorganized, and for you being the leader out there for you, is something that can actually be extended or stretched beyond FY23? Would you reckon it could be a decade of a 15% growth rate top line possible for you, or maybe more?
So the 20% top line growth, I'm in complete agreement. Yes, it's possible, but for me to make that, will it go on for a decade? It might be a bit of a stretch. We are living in uncertain times, and therefore at this time, even the thought processes are like that, where you tend to think a little shorter time and not really look at.
I was only coming in from a perspective of what you said, wherein the organized is still only 30%, even within their efficient players, probably taking share away from inefficient players and all of that, which is why.
Absolutely possible. We have to do our bit. That's it. I mean, the environment is there, the markets are there, the potential is there, all those things are there. But then, as I said, that we have to do our bit.
Okay, fine. And last question, Mr. Gautam, you've have 50 years of this company now, and you've kind of been there for all of that since 1971, if I'm not wrong, as I heard you say. What have you learned of what not to do in this business from that experience of the last 50 years?
So let me, maybe it will be better if I say what has worked for us.
Sure.
Right. I would say that it's not that we have not gone through challenging bad times. There have been events. There have been events like, let's say, right in the initial stages when the product was there was no market for the product. And when I went to sell, there have been at least 2 occasions embedded in my mind where the shopkeeper has asked me, please go away. and come back later. I don't have the time for you. So when the product didn't have enough market, those were challenging times. There have been in the life of the company, there have been also times when there have been some court cases, and this was the late 70s, 80s. There has been an adverse incident. We've had a fire incident where everything kind of came to a standstill, etc. But I think two things that we did not lose out on. One was the courage and hope. We never sort of faltered on that no, this is there, this has happened, fair enough. We'll get over it and move on, and to find a way and move. The second, I think, was over the period we built up some values, and I would say I wish that some of our colleagues or co-manufacturers and the others would kind of be listening to. So three areas. Number one is on what we call as an absolute value for ourselves is integrity, And what we mean by integrity is that everything has to be done with the right intention. The intention is to grow the market. Intention is to move, do the right things, etc., and for the right reasons. And then when it starts in your head, what you say is exactly the same, what you mean is same, what you act on is same, and that to us is very important. And in a company, we have stuck to that. We would not do it for wrong reasons. We would not be irresponsible. We would not be, would say a wrong thing. Second, I would say that we have spent a bit of time on, or have learned, is what I would call, the others use that word, which is humility, but I think it's the ability to learn. So right now, Niraj, that I am even talking to you, I am actually learning. I am learning a lot from this interaction. So every interaction, everybody that you met, talked, experienced, there was something to learn from, absorb whatever was good for us, and move on. And the third, to my mind, has been a focus or a perseverance, but let's say focus. So we did not dissuade, There was a time when there were .com companies coming up. If you were not in the .com business, you were finished. You had no future. Or if, like a few years back, real estate business, every big businessman doesn't matter which area he was in, which segment, was building colonies, was investing into real estate, etc. We didn't do that. We said there is enough of potential in our own business. We will continue to remain focused on that. We will persevere, take it to its natural end, and whatever is the thing that we need to do. So I think those were the 3-4 things that worked well for us. And the contrary is something that we would not do that. 50 years have gone by, and these values have been good. And I am sure they'll be good for the next 50 years. I'll be there, not there, for sure not there. But to help build teams, to look at adverse conditions, etc. These would hold, yeah.
Well, I'm sure the way you're saying about these, that those would hold and probably improve as new blood comes in as well. But Mr. Gautam, as amazing as the first 29 minutes of this interaction were, my biggest takeaway from this interaction is the last answer and the things that you said about the business and the way your company is being built and the ethos around it. So thank you so much for that.
Niraj, thank you very much. And it's been a pleasure. Absolutely.
It has been a pleasure indeed. And viewers, thank you so much for tuning into this edition of The Talking Point.
Thank you.